What if I told you the stock market was never created for you? What if it was born from war, fear, and power? Before screens, before charts, before Wall Street. There was a secret deal between survival and money. And once it started, it could never be stopped. Stay with me. Because the truth behind financial markets is darker than you think. To understand the markets, you must go back before money had numbers. Back when wealth was land and power was food. Imagine a world with no banks, no prices, no stocks, only trust and memory. People traded grain for tools, cattle for protection. But here was the problem. What happens when trust breaks? What happens when a trader disappears? What happens when a harvest fails? That single problem changed human history forever. And slowly, markets were born. But not the way we are told. The first markets were not buildings, they were promises. In ancient Mesopotamia, merchants traveled for months. They needed credit before banks existed, so temples stepped in, because temples were trusted. They stored grain. They recorded debts on clay tablets. This was the first financial system, because people needed certainty, and because uncertainty creates fear. But here's the twist. Once debts were recorded, they could be traded. And when debt is traded, power changes hands. But what happened next is even more shocking. In ancient Greece, money became metal. Coins were stamped by the state. Why? Because control matters more than value. If the state controls money, it controls trade. And if it controls trade, it controls people. Markets expanded. Ports became financial hubs. Merchants became influencers of their time. But risk was everywhere. Ships sank. Wars broke out. Kings defaulted on debts. So people asked a dangerous question. What if we share the risk? And that question changed everything forever. Here's where everything changed. In medieval Italy, in cities like Venice and Florence, merchants created partnerships. One investor funded the journey, another sailed the ship. If the ship survived, both profited. If it failed, both lost. This was the birth of shared risk, the DNA of modern markets. But then came the real turning point. The birth of stock markets in 1602. The Dutch East India Company did something radical. They sold ownership, not products, not ships. Ownership. Anyone could buy a piece of the company. This was the first public stock. Why did they do it? Because wars were expensive, ships were risky, and failure was common. By selling shares, risk was spread across society. But here's the dark truth. Profit was privatized. Loss was socialized, and the market exploded. But the real twist was still waiting. The first market crash, people didn't invest in companies. They speculated. Tulips became assets. Prices rose not because of value, but because of belief. Everyone thought prices would go higher, till they didn't. Tulip mania collapsed overnight. Fortunes vanished. Families were ruined. And yet, markets survived. Why? Because governments realized something terrifying. Markets could finance empires. From empires to Wall Street, Britain used markets to fund wars. The Bank of England was created in 1694. Not to help people, but to lend to the government. Debt became permanent. Markets became institutional. And then came America. Wall Street wasn't built for traders. It was built for bonds, war bonds. To fund the American Revolution, markets didn't grow from freedom. They grew from survival. But what happened next reshaped the modern world. Industrial Revolution. The acceleration factories needed capital. Railroads needed billions. No single person could fund them. So markets stepped in. Shares, bonds, speculation. Wealth grew fast, but inequality grew faster. Because information was power, and insiders always knew first. Crashes followed. 1873, 1874, 1875, each time. Markets fell. Each time, governments stepped in. And each time, markets came back stronger, but with more control. The psychological shift here's the uncomfortable truth. Markets stopped reflecting reality. They started reflecting emotion, fear, greed, hope. Prices moved not on facts, but on belief. This is why bubbles form, because humans never changed. Only the tools did, and now everything is faster. But the system is the same. Today, markets control retirement. They control jobs. They control governments. One crash can erase decades of work. Algorithms now trade faster than humans think. Money moves in milliseconds. But the rules were written centuries ago. And here's what most people never realize. Markets were never designed to be fair. They were designed to be efficient. And efficiency doesn't care about morality. That's why crashes repeat. That's why wealth concentrates. That's why the game feels rigged. Because in many ways, it is. But here's the final twist. Once you understand how markets were created, you stop seeing them as random. You see patterns, and patterns can be learned. Financial markets were not accidents. They were built from fear, war, and survival. They reward knowledge and punish ignorance. The question is not whether markets will crash again. They will. The real question is, will you understand why when they do? If you want more deep, untold stories like this, subscribe.